Let's discuss the market movements further with Faheema Adia, equity analyst from Momentum Securities. Faheema, thank you so much for joining us this evening. How did the market perform today?
Evening, Melissa. Thanks for having me. So I think the general week can be defined by being quite choppy after we had that commentary that came out of the US Fed on interest rate hikes and the outlook for that. But if we look at today in particular, the JSE was marginally weaker, with a lot of the weakness driven by the resource sector. We had inflation data released from China earlier in the day, which showed that there was a decline in the CPI numbers, creating fears in the market that China may be facing a deflationary environment. And this, of course, has an impact on our local miners and commodity stocks, given that China is one of our biggest trading partners when it comes to commodities. Then, like you mentioned previously, we also saw the mining output numbers released today, which showed a decline in output of about 2% for the month of September year on year. So I believe that is also partially contributing to the weakness in that resource sector today.
If we go to some company news, the paper and pulp company Sappi's annual profit plunged by more than 50%. And this is according to their results for the year to end September. What happened here?
Yeah, so basically, the profits were down, but I think this was pretty much in line with what the market was looking for. So you'll see that the stock price was actually up after that report. So what's been driving the weaker results has been headwinds the company's obviously been facing from a weaker global environment and probably one of the most challenging down cycles it's faced in the pulp and paper industry. So one of the main issues has been reduced orders from customers due to a lot of stockpiling that took place in 2022, and that resulted in a drop in that earnings and revenue. But from our point of view, we do feel that the worst may be behind for Sappi, given that a lot of the customers have likely worked through their inventory and would probably need to start ordering again. We're also encouraged by the transition that Sappi is making away from the graphics paper business, which has been in a secular decline for quite some time now, and looking for more profitable opportunities that lie in the packaging segments and specialty paper. Also, the performance from North America has been quite strong and positive, which provides some revenue diversity for the business. So all in all, I think despite a weaker set of results, we believe Sappi is well positioned for recovery in the next year once that cycle turns.
To another sector, the Truworths International Group released retail sales for the first 17 weeks of the 2024 financial period, and it shows good news internationally, but less so locally.
Yes. I think it's a general trend we're seeing across retailers locally in South Africa. So Truworths, like you said, reported weaker sales in the SA market. And that's basically due to a weak consumer that's been impacted by high levels of inflation, interest rates, and basically just higher costs of living in general. And it's not unique to Truworths, though. We are seeing it across all the retailers in SA. But on a more positive note, like you said, the UK office shoe business is actually performing quite well. It's showing strong recovery with double-digit increases in sales growth. So it seems like those turnaround efforts that were made at Office over the past few years is actually starting to bear fruit. So bear in mind, Office was actually an underperformer for the group in the past. And there has been significant restructuring there over the past few years with the closure of some of the non-performing stores and the reduction of trading space. So it's definitely encouraging to see that those turnaround efforts are yielding fruits now in this update.
Thank you so much for your insights, Faheema. That was Faheema Adia, equity analyst from Momentum Securities. Up next is